Thank you. I appreciate that introduction, and it's great to be with the pub. We love the trading pub. Some of the best education I've been able to listen to and take notes on comes out of these events, and it's always nice to be a part of them. I especially enjoyed Norman's presentation this morning. I've heard Norman speak a few times, and gosh, I believe wholeheartedly that the psychological aspect of trading it's enormously important, especially to you and I, those who are retail traders. I think it's one of the reasons why most of us are not successful in trading is that we don't have abilities or mechanisms or a plan to keep those things in check. I think it's a yes, Norman, I will say hi to Aunt Marie for you. And on that note, we'll start with all the Osmond jokes. But yeah, I think that the psychological aspect to trading is really a big deal. And in fact, it's one of the reasons why I'm a very big technical trader. It's why when I first started trading, I wasn't so much on the technical side. I did a lot of news listening and things like that. I failed pretty miserably at the outset, and I really needed to have a mechanism and a way and a plan to map out my choices. And that's hard to do. I've met with a lot of people and presented to a lot of people over the years, a lot of professional traders and a lot of retail traders, and I found a very interesting difference between us, the retail trader, and the professional trader. And that's this ability to keep their emotions in check and our inability to do the same. Would anyone like to venture a guess why that is? Why are they so much better at being stone cold traders, and why are we so given to our emotions? What is it that makes it so difficult on us? Does anybody want to venture a guess? I'd be curious to hear your ideas. I've asked this question many times, and it's funny the different types of answers we get. Karen, not emotionally attached to money. That's a huge part of it. You're almost exactly on the head there. Losing money, a la practice, Rhonda. Good. These are excellent answers. It's our own money. Tim, you hit it. You and Karen were Karen was very close. Tim, you're right on the head there. You're trading your own money. You and I are trading our retirements. We're trading our children's college funds. Hopefully we're not trading our mortgage payments. Don't do that. But we are trading money that's very close to us. And the professional side, they're typically trading somebody else's money, yours and mine. Those of us who have those retirement accounts out there that are managed, that's what they're doing. And not that they don't care. They care because they need to make money too, and they need to be successful at what they do. But it does remove them from, I think, the most emotional aspect to trading, and that it's very personal when you're talking about your own money. And it's why I really gravitated towards technical analysis. And technical analysis, what it does is it gives you, the whole point and purpose of using technicals is to map out in a very visual way to make sense for your brain what's going on in the market and be able to look in the past and say, well, based on what's happened in the past, can I expect some kind of similar motion going forward? Now, that's not always the case. There is no such thing as a 100% silver bullet trading system. Let me just put that there first. Anybody who tells you differently, I would be very suspect of. Now, that being said, you can absolutely become more successful and win more than you lose, but you will lose trades. We all have, and you all will continue to. The idea here is to be informed enough and have a tool set that's powerful enough to help you make good choices based on what's real. And that will help, I think, kind of keep those emotions in check. It certainly has for me. It has for hundreds and thousands of traders who use MetaStock. It's what we preach. It's what we do. Now, MetaStock's been around an incredibly long time. We've been around for years and years and years, 30 to be almost exact there, and older than most companies, most software and technology companies that exist anywhere on the planet. We're proud of our longevity. We're going to be around for another 30. We've watched a lot of other technical analysis platforms come and go over those years. And you might say we kind of started this. When it comes to doing technical analysis on your computer, we were the first. We certainly didn't invent technical analysis. That's been around for quite a long time. But it was all done hand-drawn with paper and pencil and rulers and protractors. And we've tried to make it as easy as possible on you, the individual trader. And it can be, I think, a little bit daunting when you're getting started with it. So I want to help you, if I can, by showing you a couple of tools and techniques that are unique to MetaStock. One that we'll spend most of the time talking about is the forecaster. Okay, before I get too far into this, I have to read you my standard disclaimer so that I can appease the lawyers. You've seen this and read this 100 times from other presenters, but please just bear with me a moment here. I'm required to read it down. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Okay, so what I want to do is I want to go straight to my MetaStock here. What you're looking at is kind of that main screen in MetaStock, and I just want to touch on basically a few things here. One is just basic charting. If we wanted to pull up the Dow, we just type that in there, and we pull up, we've got a candlestick chart here. And as I mentioned before, technical analysis, the whole idea is to represent things in a very visual way to help your mind comprehend what you're trying to do with your decisions, to strategize, to set up a trading plan. And that's going to include things like, well, where are my stops set? And what am I going to do if if the trade goes wildly in my direction or wildly out of my direction? Or if it's going to go sideways. You need to have these things completely mapped out. And I hope that each of you already has some form of a map that you follow. Whether it's with MetaStock or any other platform out there, it's critical that you have a tool set that will help you build a plan around what you're trying to do every day. Otherwise, you're just out there, a little boat on the ocean, you're a little tiny skiff just bobbing around in the seas. You've got to have a structured plan when you go into your trades. Know exactly what you're going to do when the market turns in one way or the other. Now, what we won't be able to cover, and there's a lot, what we will not be able to cover is the very powerful scanning utility that MetaStock comes with, hundreds of scans where you can scan the full market looking for very specific types of setups that you can create on your own. If you have a customized idea, we have a very well developed and very powerful system tester that allows you to back test your strategies before you spend any money on those trades, to go in and set up full simulations on, well, if I had followed a MACD system over this period of time, would I have made money on that stock or those 15 stocks, or whatever you'd like to do. You can create those test scenarios to give you more confidence going into a certain type of strategy. We won't be able to get into all of the incredible aspects of MetaStock. There's too many. I want to focus today on one that is entirely unique to MetaStock. It is brand new, and it's caused quite a stir in the technical analysis world. Those of you who have the most current versions of MetaStock, you have this tool. It's called the forecaster. What the forecaster does is, in a nutshell, it is giving you the highest probability of where a price may go in the future based upon a very specific technical setup in the past. Let's just work through it together. I think it's going to be best to explain this to you just visually so you can see what we're talking about. Let's actually do a forecast just right here on the Dow. So I right-click in MetaStock and it will pull up the forecaster, and I'll move it over here so that you can see it. Now what we're looking at right now is the one of two tabs that come with a forecast, and right now we're forecasting for the Dow. What you're looking at is a 5-year historical representation of price for the index. Excuse me. These little yellow triangles are pinpointing specific times over that period of time historically where we've had a very specific technical setup. And in fact, the one we're looking at now, if you look below, says candlestick doji bearish. This is what we call an event or a technical setup. And if you're familiar with candlestick patterns, then a doji bearish, if you're familiar with what that is, that's typically a reversal signal that we get from a candlestick pattern, and it's tracking every time we've had that signal over the last, gosh, it looks like we've had about 25 of these over the last 5 years. Now, why is that important? Well, that's the next tab. What these points, these yellow points, are telling us, and this is something you will never see out there if you haven't seen MetaStock in the most recent version. This is very, very new to you. This is now a representation of days going into the future based upon that doji bearish. Now, we have at the bottom line here an x-axis that tracks 7, 14, 30 days into the future. We can even go as far as 180 days, what we want to see. Well, how is this telling us? What is it telling us first? And then we'll go into how it's generating this signal. What it's telling us in real clear, I think, visual stimulus is that anytime we have, based on the scale on the right, these hot pink colors, we have between a 60, 70, 80, 90, 95% chance that prices will arrive in that zone during that period of time. So what's this saying is that on the outset, we've got more likelihood of a bearish move over the next few days than we do above. But by and large, kind of sideways this cloud pattern looks like, does it not? Looks a little bit sideways, and then certainly it has a bullish tendency to the tune of about 1.5% increase in price. This axis over here is the price. Whatever the Dow is right now is at 0%. And so we're saying that if we find ourselves up in this pink cloud here at about 20 days, then we should be at about a 1.5% increase on the index. Whenever we have these blue zones, that means prices in the past have come into these areas before, but not at great frequency. So they're less relevant. The darker these warm colors, the more relevant those times are. So these would be the targets we'd be shooting for. Well, why is this important? How is this being generated? Well, it's important, obviously, because we'd love to know, what could happen in the future. This is not a crystal ball, like I said earlier, but it's certainly telling us something. In the past, whenever we've had this setup 25 times, this is where all this data is calculating and permutating everything that's happened past those times. It's putting it all together and generating this very, what we'd call a dynamic cloud, meaning that as this progresses and maybe we get some more of these dojis in the future, it's going to change the look and style of this cloud because it's learning, it's adapting, it's picking up more information and saying over a period of time that when this has happened, this is the expectation we can see going forward. So we have a percentage of probability that prices will stay in this range. Now, I think the best and most fascinating part of this mechanism is that you can test it. You can go in there and you can test these historically. What we've done is the developers who put this together ingeniously, anytime this happened in the past, for example, if we hover over this one, April the 24th of 2014 was the last time we had this. Well, if I click on that, it's actually going to show me a static cloud. This is not the dynamic cloud that we have in this tab here. It's very important because this was the cloud we would have seen on that day. And once we make a historical record of it, it does not change. So now we can compare it with what actually happened in the price bars. We didn't have these price bars on this day because they hadn't happened yet. It would look more like this. Now we can compare it and say, okay, well, this is the cloud we would have gotten on that day. What did it do? Well, it did a very nice job actually kind of hugging right into and following some of the highest probability. Went down below here and interestingly enough kind of came out of its predicted range entirely. And usually when we see that, when we see things kind of dip out of their normal range for any kind of reason, we usually feel it kind of going back up, almost like a support and resistance type of concept there. But we can go back in time and click on any of these. Say, well, how good has this this signal been for me? Well, here's a point where back on April the 3rd, where wow, this thing really underachieved on what we thought it did. It did something completely different than we thought. What we see here is, once again, it came out well out of its normal range. And if I was trading this and I saw this and I thought, wow, this is really outside of its normal range. Now, if I'm a candidate, this is something I'm charting with. This is something that I use to create buy and sell signals if you happen to use that. Well, let's say you don't. Let's say you use 52-week highs. Let's kind of reset. Let's say you like to look at highs and lows, or CCI negative divergence, or an RSI, moving average crosses. There are 67 of these. Oh, did you guys lose my
Dave,
slides?
Yeah, just excuse me for a minute. We just lost your projection for a moment, and we're not seeing your slides now. So if you could reproject, that would be great. We just had a little hiccup.
You bet, no problem. Let's see. How's that?
Perfect. We're back up.
Did you get that back?
Yes.
Okay. Okay, good. But we're having a lot of fun with the technology today. It does happen from time to time. I've used a lot of different platforms, and actually Omnovia is probably my favorite. I like it better than most that's out there. We're probably going to start using it as well. I think it's the easiest to use from a audience participation standpoint. Thank you for the heads up. I will watch for that. Let's say you are more interested in a MACD. You can scroll through here and you can find the type of analysis that makes sense to you. So if you're already using charting, and let's say you chart and you like the type of MACD signals that you're getting, or you like the CCI, or you're a big stochastics person, there's one in here that will fit your needs. And that will give you an entirely different view on technical analysis. It's going to give you a whole new perspective and point of view, and that's valuable. So let's go ahead and just kind of look at a couple more of these. And in fact, if there are any symbols or instruments that you trade and you'd like me to use in the forecaster, I'd be very happy to do that for you. Otherwise, I'll kind of go through a few that are ever. Let's go ahead and open another one for Apple. And again, if you've got something that you would like me to look at, just throw it down there and we'll do some analysis here on your instruments. Okay, we're looking at Apple now. And in Apple, 52-week high. Now let me explain a couple things that I missed here. The reason that 52-week high is at the top of the list and not the doji is because it's the most recent. It's not necessarily more powerful. It's not necessarily more meaningful. It's just that it's the most recent event in this list. And one thing I do want to explain is that off to the right here, for you stat junkies and engineers, there's a whole explanation of each one of these little yellow triangles, okay? Showing every time this event occurs 135 times within the last 1,876 days. Gets very, very fine-tuned and specific about the statistics of the probability margin. So that's something that I think if you're really inclined towards data and statistical side of things, this is going to be a huge, really fun window for you. If you're not, if you like to keep things a little simpler, like maybe I do, then you're going to be using that a little bit less. I'm a very visual person, so this type of thing really resonates with me. It helps me a lot. That's why I chart. When I use my charts, I like to keep things very clean. I like to see those signals and understand where support and resistance is being broken or bouncing. And this is one of those great tools that'll help you do that. So let's look at Apple, and then I'll get to some of your questions. Apple, this is a very kind of sideways looking cloud, and then very bullish to the tune of darn near 7%. Now this is over a longer period of time. This is over 90. about 100 days. This is a 180-day outlook for a 52-week high. So that's interesting. When we've had those 52-week highs, that's kind of what we've had in the past. We've had this sideways motion and then a move up. But I think what's really fascinating, let's look at this a little more carefully. Now, in the past, you can see when we've had this 52-week high, we've still seen growth, 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 major correction right here on the last one. And then growth, major correction on new highs over the past 5 years. And I think we're kind of coming up on that. If this is me and I see this and I think, wow, this looks very, very similar to some of the corrections we've had in the past, this just gives me a great visual way to kind of analyze that and say, that's interesting. What should we expect, going forward? Well, let's check some of these historically. In the most recent past, it's really kind of followed some of the things that we thought and actually exceeded in a lot of ways. So I think this one would be, I'd be a little suspect of saying, well, I see this, it's just going to go sideways for a while and then it's going to go up. Well, 3 times historically, that's not what it did. The other rest of the times, it continued to just kind of grow. We saw a lot of growth. So I don't know, that kind of leaves me thinking maybe I need to look at some other signals. Maybe I need to look at the stochastics. Maybe I need to check out my my doji. That's up to you. Like I said, it's a very personalized thing here, this trading based on technicals. You've got to find your system and make it work for you. Not everyone's system is going to be perfect for you, but I tend to like to take bits and pieces from people's systems and stick them into my own. Let's take a look at CSIQ. Oops, sorry. It's .o. What's going on here? Oh, sorry. Sometimes it doesn't like it when I CSIQ. Let's make sure I'm using the same caps. Sometimes it gets a little fussy if you don't do everything in the same either caps or okay. Let's see what we're dealing with here for Karen. All right, Karen wants to look at this and for Canadian Solar. And right now we do have some candlestick patterns that are showing up. Curious to know, Karen, if you're a technical trader to start with, and if you use technical signals, then we can maybe look at some of the technical signals that make sense for what you do. What type of technical signals do you use right now? Looks like most recently, we're looking at I like looking at these moving average crosses. They're pretty relevant to what I do. Let's take a look at the moving average 200 cross down. Okay, moving averages and volume, you sound like a lot what I do as well. Interesting forecast here. Looks pretty sideways when we're dealing with a 200 cross down. Let's see what it's done historically when we've had that. It just kind of looks like it has a tendency to just kind of move in that direction. Last time we had that, Karen, was October the 9th. And, it just kind of stuck right in its high probability area and it's still there. And it still wants, it's telling us based on that technical 200 cross down that this thing is looking pretty sideways for the next few months. That's what this is telling us. And so that might tell you a little bit about where your positions are. Now, I would be looking at volume very, very carefully, and it looks like we've got a volume spike at the same time. Now, last time this happened, we didn't have a big spike in volume. In fact, the last few times we didn't have a big spike in volume. So this is one of the first times this actual signal has come at the same time that we had a big boost in volume. Well, what does that tell you? You're going to have to look at that carefully. But this is another way for you to look at it and analyze it. I'd probably run to my chart and say, let's take a look at my moving averages. Let's look at my volume. Let's look at, but this gives you a good historical background on it. And I think that's really important. Yeah, they just reported earnings. So I'm not much of a fundamental guy. I generally don't listen to the news. The market reacts to the news, and my technical indicators, there probably would be considered in the lagging side of things, but I'm a very conservative trader. I do not like taking losses. Who does, right? So I keep pretty tight stops. I am pretty efficient despite that. And sometimes when we're conservative, that can be at the expense of being efficient. There's a couple of trading systems in MetaStock. Raleigh mentioned earlier, big fan and user of the RMO system in MetaStock, which is very efficient and has done very, very well for me. It fits my trading style. What the forecaster, I think, does to really improve for me is that, you might be like me where you have some limited, excuse me one second. Excuse me. For me, there's probably 10 trades I want to take every day. I don't have the capital for that. I'm not dealing with equity in that size where I can start, really parsing off into that many positions every day. I'm an end-of-day position trader. I do this pretty much all day. I've got 7 kids at home, big family. And so when I come home, I generally only spend about 20 minutes on my positions. And what the forecaster has helped me do is really whittle down my best opportunities. My typical day would be to hop on MetaStock, run my scans. I've got 4 or 5 scans that I like to help build up a watch list. And if those on my watch list have moved into a position that I feel good about, I'll take those positions, I'll run them through the forecaster and find out what is my best likelihood on these, because I can't take them all. And that's how I use it. Some other things, other ways that people use it, especially if you're an options trader or a futures contract trader, and you're dealing with expiring contracts, wow, this is incredibly valuable to you. This could tell you a lot, and in fact, the whole idea of probability analysis is it's been around a long time for you options traders. Some of you are looking at these probability cones, some of the things that you're dealing with there. Let's take a look at, let's see some of the questions I got to catch up on. Barbara. What about time frames? And is this for Forex? Yeah, it is for Forex. Anything you can chart in MetaStock, you can run a forecast on it. It is all based on daily time frame. We are working on an intraday version of the forecaster. It really takes a lot of CPU power, so we're working that out. We don't want to bog down your computer. And to do that, that's just a ton of data. But that is something that we're building. But for now, we're talking about daily bars for everything. But in MetaStock, despite the name MetaStock, we might as well be called Meta Futures, Meta Forex as well. You can chart anything you want in MetaStock. In fact, maybe we do one of those next. Maybe we'll do the euro dollar. Let's see. Okay, let's do that. Let's jump into that. And then, Karen, I'll go back to your question in a moment. I'll stay on track here, but maybe we can go back and kind of construct a simulated trade using the RMO and the forecaster together. But let's start with a Forex pair. Let's go ahead and open up the euro dollar. Okay. And you can see that you can keep these up here. It's nice. It keeps you organized. You can run as many of these as you want. All right, so we're looking at the euro dollar here. And let's see what we've got cooking. We've got some 52-week lows have been very, very active. What's interesting, I love seeing this. Whenever we have a conglomeration of something like a 52-week low or high, we did that before in the past. When we kind of finally hit bottom and move back up. That's already telling me something that maybe this thing is hitting the bottom. Let's look at the forecast cloud based on a 52-week low. It's very interesting. It doesn't think it's hit the bottom completely yet. It looks like it wants to go a little bit on the bearish side based on that, and it has a really weird looking cloud here where we've got this little area up here and this one down here. More often than not in the past, it has continued to go down after this time. But there has been enough occurrence in the past that it's jumped at about 80 days or so in this range. that it left a mark for us going forward. Let's take a look at some other things. Candlestick. Now here's where it gets really interesting. You start changing things up. Just depends on your personal flavor of, your personal flavor of technical analysis. If you happen to be really into the MACD, negative divergence signal happened here, and it gave us a really interesting. But that was a while back. We don't have anyone that's recent, but that's an interesting cloud based on that particular signal. So yeah, you could use this on really any instrument you want. Let's take a look at another one. Well, let's look at one more Forex pair. Let's look at the pound. And then let's look at some other types of instruments like gold, oil. I think you'll get an interesting take on it. So 52-week low right here. We just had one of those. And in recent years, looks like in the past when we've had those, we've had pretty good growth. It's a pretty good reversal signal. So let's see. It feels like this is a strong reversal signal. Now I see all this strong dark reds here. That says whenever we've had a 52-week low, we've had an 80% chance of a strong reversal to 2%. And then we'd lose some, back down to 1%, and then almost come back to right where we started again at about 100 days. This is a very interesting cloud pattern. If 50-week highs and lows, 52-week highs and lows mean something to you, this paints a picture, literally, that can influence the way you trade. So if I had my charting going and I was looking at this particular pair and I thought, boy, my chances of a reversal look pretty good according to my charts. Then I went in and took a look at this on the forecaster. This would really bolster my confidence in that position. And it really kind of comes down to that, you guys. Once again, let me go back to what Norman was saying earlier. It is about building confidence. You don't want to trade out of fear. You don't want to trade out of greed. All those emotional responses are what make trading so hard. And that's the whole point of these tools. And what I've seen this 100 times with traders. They find some tools that work well for them, and then maybe they add too many tools, and they're just like, oh, I've got all this technical analysis, and I'm getting just my chart looks like it's a big, Jackson Pollock painting. You can go, I think, too far with it and get a diminishing return. I think you've got to find and settle into technical systems that work really well for you. We all trade very differently. Your temperance for risk is going to be much different than mine. We're certainly trading different instruments, different amounts of equity. And so it's a very personalized thing. And I think it's important that you find, whether you're on MetaStock or any other platform out there, that you find trading systems that work well for you. That you find trading systems that enter into your mind and make sense and you've been successful with. Okay? Yeah, you can really paralyze yourself with too much. And I've seen that a lot. And so you have to try to find the right tools. And that's one thing we really pride ourselves on in MetaStock. And I'll go back to the MetaStock platform here. There are so many systems available to you here. Hundreds and hundreds of systems and scans. And that can be overwhelming because there's so much. It's not intended for you to use all of them. That's not the idea. The idea is to give you a very vast palette of paint and then let you choose the ones that work best for you. Now I'll show you, I'm getting a little sidetracked here, but I think we should do it, and Karen wants to look at it, but let's look at this RMO trading system, for example, because this is one that I've found works well for me. It works in the way my brain works. And it might help you. It might not, but it might be. If something on here really kind of strikes your interest and you say, you know what, maybe this is a system I can work with or add a piece of it to what I do, then great. Then I'll feel really great that maybe I've helped you with something. But let's go ahead and take an instrument. Well, let's take Karen. Let's take your instrument that we were just looking at. What was it? Canadian Solar. Yeah, CSIQ. Okay, and let's just. Oh, sorry. Let's do this as a chart. We've already opened that as well. CSIQ. Dot O. All right. Let's just open up a chart here. Interesting, I'm actually getting a warning signal on this chart right now. Probably because of those earnings. Okay, so we'll go ahead and skip that alert, and let's just take a look at it here. The RMO, and I'll just briefly explain to you how it works. It's a 1, 2, 3 confirmation. I'm a big believer in if you've got systems, so you're using technical analysis, you should have more than one that confirm each other. That's essentially what the forecaster does. It's a confirming signal for us. The meat of this thing is this top indicator, and I'll highlight it here. It's an oscillator, so when we're dealing with oscillators, we're talking about above 0 or below 0. And so if we're above, we are said to be in a range that is bullish. So we would be up here, we would be bullish. If we were down here, though, we would be bearish. That's pretty easy to see, and that's one of the reasons I like this system is it's awfully simple. If we're above 0, we're bullish. If we're below, we're bearish. Pretty easy. That's step number 1. Now we have to have 3 confirming signals going in the same direction. I can't have 2 bullish and 1 bearish. I can't have 2 bearish and 1 bullish. I must have complete agreement, bullish, 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 or bearish, bearish, bearish. It's hard to say, actually. So we've got 1, right, in this case. Right now, what is it? It's sitting bearish. We are under. It was bullish yesterday, so it's a little tenuous. We don't have a lot of track record going forward, but you can see that there's little pockets here of agreement in one direction or the other. So let's look at those. Down below here, this is where we get our next 2 signals from. When the pink line is above 0, guess what? Not hard. It's bullish. That is not hard to see. Pink below, it's bearish. So if we have that, then that's our signal number 2. What is it now? It's barely bearish. It has just crossed below that line. So we do have 2 in the same direction right now, do we not? We have both this one and this one in the same direction. Well, what's number 3? Well, number 3 is not an oscillator at all. What we're dealing with are crossing points between these, what look like, if you're familiar with moving averages, these do look like some type of a moving average, do they not? There's actually a lot more to the code here than just moving averages. There are other items that are mixed into this. I don't exactly know because the code on this is actually a proprietary trading system, and the code is not available. But it does look to me like this is more of a medium type trend, and this is more of a short term, given that it's very volatile. But when these 2 cross, that's number 3. Where we've got crossing points. Now if it crosses above the blue line, that is bullish. If it crosses below, that is bearish. Now, right now, we don't have a cross right now. It hasn't happened. So it sure looks like it's headed that direction. This is a very sharp looking short-term volatile move. And maybe in the next couple of days, we could have a cross. We don't now, so we don't have agreement on this. This is not giving me a buy or a sell right now because we don't have all 3 in agreement. You're saying, well, look at this huge red candlestick, Dave. Come on. That's a sell. Well, maybe it is. Maybe it isn't. That's hard. It's hard to say right now. This is where some of my conservatism comes in. If it's not really clear to me, I don't take that trade. Now, here's a couple examples of where it got really clear in the past. Let's look recently. Here's an excellent sell right there. Now you're saying, well, wait a minute, that's a red arrow, but I'm still kind of up here in the range of being bullish. Yeah, we don't actually have all 3 conditions met until this bar. Right here is actually where I'm taking this trade, because then I have pink line, green line, under 0, and I've got my crossing point that happened back about a week and a half ago. And this is on a daily chart, and this works also on intraday trading as well. Same rules apply. Well, you're looking at that and you're saying, Dave, you missed the whole front end of that trade, and you got a signal where the short-term crossed below. Could I have taken that? Absolutely. Would there have been a higher risk of it going the other direction? Yeah, we were still showing bullish tendencies. And it didn't actually confirm all 3 until down here. And that's okay, because I ended up with a pretty good move down here. And once I kind of saw things going in the other direction, especially when we got this crossing point, that's where we're thinking, boy, it might be time to start exiting this trade. But this is interesting. This is where the efficiency comes in, I mentioned earlier. If this is just you and I, the average trader, and let's say we took a trade on this day, we're feeling a little nervous the next day because it went up a little bit. It comes back down. We're like, okay, that's fine. We're still going in the right direction. Feeling pretty darn smart by the time we get down to here on the 15th. Well, the next day, we have an up bar. Next day, down. So, okay, how many of us would have bailed out right around here? A lot of us. That's a lot of motion. That looks like a trend. Does it not? That looks like a trend to me. This is why I love this trading system. This would have kept me in the trade the whole time. I don't actually have an exit signal at this point, and I'd still be short from here to here. So now common sense and just nervousness would have 99% of us would have bailed out of this trade already, but this thing still wants to go bearish, and so we would still be in here and we'd still be going targeting somewhere down below this support level. Does that make sense? I know I'm getting a little sidetracked on there, but I wanted to help just wanted to help Karen with that. So if I'm looking at these moving averages and I see this and I go over to the forecaster and say, well, let's take a look at that again. Hopefully we still have it up here. And we go in and we look at those moving averages and we see that the cross down just happened. It still has kind of a sideways to bearish look. I would say that this still looks pretty bearish. Confirming signal of what we saw in the other sets of charting. And that's how this should be used. The forecaster probably should not be used on a single kind of alone basis. I don't know that I would say, hey, you just look at the forecaster and that's your signal. I think the forecaster best functions as a confirming signal to what you're trying to do. It also, I think, paints such an interesting picture. It resonates with me because it's incredibly visual, and I need visual help when I'm trading. It's just the way I am. I think that's why I prefer it much more than the fundamental side. It just works with the way I see things. Let's take a look at a couple other interesting. I know there's a lot of Forex guys in here, so I want to make sure we're hitting off on talking. Let's look at this on a Forex chart. Let's look at the euro dollar, and let's look at it on an intraday basis, shall we? Let's back up a little bit, and let's go ahead and look at it on a 30-minute. Well, no, actually, I apologize. We're going to have to look at it daily because I'm logged into my daily version. I'm not logged into my intraday version. The rules are the same, nonetheless. And let's take a look at this because, wow, what an interesting. This is a good example of the efficiency that I like about this trading system. On this day, we got a crossover, and this is what I scan for. In MetaStock, I can scan through the whole universe of instruments that I'd like. So they show me everything that had a cross. And you can go look at those crosses and say, all right, let's zone in on that a little bit. Let's take a look at that. So I got this cross, and I got an alert on it, and then I go in and I check it, and I say, okay, well, we've had the cross. There it is. And is the pink line below zero? Well, yeah, it is. And is the green histogram below zero? Well, yeah, it is. This is rare. And it makes for an excellent signal when you have all three, 1, 2, 3, in the same direction on the same bar. Because it doesn't happen all that often. Usually, when I'm scanning for these arrows or these crossing points, what I'm scanning for is something that I can keep in my watch list to see if it develops into a trade that is confirmed. But this thing got confirmation on the same day. So let's say you and I, let's go in our time machine, and the date is okay. I think I just lost my slides again. It looks like I keep getting bumped out. Let me just fix that for you. Let's make sure you can see them. All right, you should have my screen back. Okay, that time I got a little warning that said I'd been disconnected. Okay, so let's say we took this trade on 7:15 in that direction. We said we're going to go short. Well, we were rewarded immediately, weren't we? The very next day. things went the right direction. And they continued to, on a very nice looking trend. I don't think any of us would have gotten nervous till about this point where it starts going sideways and we're like, if we know our general how people feel about risk and about things like that, many of us would have just cashed in right there in that position. But the RMO said, don't you dare, because look at all the strength up here. The RMO said, we are so bearish and so strong in the bearish direction that hang in there, though it is sideways, we should see things turn. Now, this is another thing that would have made me nervous, is that pink line was kind of coming up and threatened to cross the blue line right there. But it never did. And if it did cross there, we'd still be in the trade. We'd have gotten a blue arrow, though, in the other direction. That would have said, hey, we got to watch this closely. But it never did, and it just kind of got going. And we were rewarded for our patience. And it just kept moving in that direction and moving in that direction until it did give us a warning. We finally got a cross in the other direction. Now, because of that move, I don't know what caused it. Maybe it was something on the fundamental side. Who knows, right? Who cares, in my opinion? It crossed, but I was so bearish up here, I don't exit this trade according to the rules. We stay in it. And guess what? We're rewarded the very next day with a cross back down. And so little indecision, but very, very strong in the overall trend. And it just holds you in there. Does it again. Holds you in there. Now, this is where we start getting a little nervous because that pink trend starts going the other direction. A lot of us would have exited this trade here. But we're still bearish. And if you're holding by your rules, you can see how the rule system, and I'm just using one system as an example here. If I can just get on my psychological soapbox again here and echo what Norman was saying. You have to have a rigid set of rules that tell you what to do. And my set of rules would have said stay. Don't get out, even though it looks like an awful decision at this point. And we're rewarded for it. And it continues to go, and it's still moving in that direction. We're still holding this. Now, this is a very efficient trade. This would be a trade we would have put on nearly 6 months ago. And we'd be holding on to going in the right direction. And that's hard to do. I get a lot of comments from people. They email me, say, I get too afraid. I get into a really good trade, and I'm out the second I take even a little bit of earnings. And then I think, oh, I get back in. I get back in, and then I just get out again. It's important, I think, to have confidence in your system that says, yeah, I can stay in this trade and be efficient with it, make less trades and make more money. That at least resonates with me. So this whole position, look at it on the long view. Just draw a line here. We would have got into it here, and we'd still be in it right now, despite some of these little peaks and valleys that come up. We got a hold of the overall trend, and we're just writing it down. That's a really good example of that position. Now, when are we going to exit this thing? What I hadn't talked about is some of the money management that's really, really important. From a money management standpoint, you have to set yourself some expectations of where you will stop. And according to this system, for short, we're looking at the high of the bar previous to your trade. And that can be modified to your own needs. If you like a really, really tight trailing stop, go for it. As long as you have a methodology. If you don't have any methodology for a stop, be concerned about getting a methodology for your stop. Set up something that says, this is what I'm going to do. Now, we stayed in the right direction the whole time here. And what we do actually is what Rahul does, and I agree with him, is whenever we see, and I'll back out again so it's more obvious, whenever we see another arrow in the right direction, well, that would be if we weren't in this trade already, do we have a confirmed short position? Yes, we do. We have a cross, and we have both pink line and green histogram under 0. And so if we were not in this trade, we'd had another opportunity on this day to get into this trade. We'd be happy we did. Now, if you are in this trade, this is a great opportunity to take your stop and shore it up. And just go ahead and ensure your take right there. Your position from 1.3 down to 1.29. Just go ahead and solidify that stop, set it in, and now we're looking at it fresh. We're saying that's all off the table. We're going to stay in the trade though, and look, we never approach our stop level. Now look at this. We had another one, so we're going to go ahead and take that. Just set that to the high of the previous day. And we're still in this trade, but we've taken all that risk out. We've solidified this whole move, and the second it breaks this line, you're out. Well, I am at least. Once I've broken my stop rules, I'm done. No conversation about it. I don't care what Kramer says. Gosh, who cares what Kramer says? I don't care what the earnings say. I don't care. This is my point of view, okay? My point of view. You may care. But once it crosses that stop line, it's over. It's done. And that works for me. You will have to come up with scenarios that work for you. And that's a personal thing. You've got to experiment, maybe a paper trade for a while using it, so that you can find your groove. Once you've done that, you're going to be more successful. And it might be that you take a bit of piece from this. Gosh, I hope there's something here you've taken, whether it's the forecaster, or it's the RMO, or maybe it's this green histogram, the RMO oscillator, or maybe it's this swing trades 2 and 3. You like the way these work. Maybe you take this indicator here and you say, I like these crossing points. They say something to me. It's a major shift in momentum that's important to what I do. Maybe you add this set of indicators to your chart. That would be great. In fact, that's what MetaStock users are famous for. MetaStock is incredibly customizable. You can turn MetaStock essentially into whatever form or shape you want it to be to fit your trading style. It comes down to that large palette of colors again. You're the artist. You figure out what works very, very well for you through trial and error, hopefully not using real money for the error part, and then use it comfortably to build your confidence, to build the system that makes sense for you. Bobby has a question here, and hopefully I didn't miss, it looks like there were a few questions. I don't want to miss any. Does MetaStock have an add-on for money management? That's interesting. You mean like a stop type add-on, Bobby? We do have one actually that's coming out soon. It's not necessarily designed around stops, but it includes several types of stops in it. It's an excellent system. We have a number of add-ons in MetaStock that include stop indicators. Now here's the thing, Bobby, is you may have an idea for a trailing stop and you want to see it on MetaStock. All you have to do is put it in an email and say, hey, I'd like to have a trailing stop that follows these certain parameters at this time. You email it into us, and guess what? We will build it for you in MetaStock language and send it right back to you to install right into your MetaStock, and it'll show up right in the drop-down list of all these tools you have available to you to go ahead and throw down your custom stop. If you're pretty good at algebra, it's pretty easy to do that yourself. If you're a programmer, it's a piece of cake. But even if you're not, like me, I'm not a programmer. But most of the time, it's pretty easy to kind of create your own stuff in MetaStock. But there is, to answer a little more closely your question, Bobby, there is an add-on coming out with, I think, 4 or 5 different stops in there that I really like. And that's just coming around the corner. MetaStock, what Bobby's talking about is we have a lot of add-ons that are built from pretty much every major guru, trading expert, educator who's got a technical system. We've been around so long that most of them have trading systems that are built specifically for MetaStock that you can purchase. So you get your base MetaStock program. It's probably in January, Bobby. You get the MetaStock program, and then you get these, like John Bollinger has one. Nearly everybody's got one. In fact, Steve Ruffley, who's in the room right now, he has one that's built for MetaStock as well. It's really important to us to make sure that the major systems and the major educators out there have their things that are set up for MetaStock, because our user base is incredibly diverse around the world. So that's a nice aspect to MetaStock. The other kind of interesting thing that goes with that is that if you have an idea for a trading system that you think is pretty solid and you think this is going to change the world for you, I've seen those a lot. You can just Google it, and we've been around so long that probably somebody else has written something close to that before in MetaStock language. Just Google it and bam, you got it. Just put it right in your machine. Ryan Jones, we do not have an add-on for Ryan Jones or Ralph Vince. We'd love to probably talk to those guys and do that though. Mention that, you know, hey, do you guys want to set something up for MetaStock? Very good. I'm running a little short on time. I want to make sure I hit one or two things here very quickly. And if I can have Yana put up on the screen there a special offer. As I mentioned earlier, we want you to try it. You may already have a technical analysis platform, and that's just fine. You know, if it's working for you, great. If you've seen something here today that you want to add to what you do, try MetaStock. Just give it a try. There's a no obligation way to try us out. It's only $59. You pay for 1 month, and I actually was something we do special for the trading pub is if you pay for 1 month, we will give to you a second month and a third month for free. And you can go in there and click that link that Yana just put up, thank you, and sign up for it. It's only going to cost you $59 for the end of day program, the one we've been looking at here. I think it gives you a really good opportunity to roll through MetaStock and understand it. We'll work with you, support you, give you all the education you can handle in MetaStock. We're happy to help you out with that. Give us a try for 3 months. If you decide at the end of the 3 months, hey, appreciate it, but I'm just going to stick with what I'm doing, no problem. You're canceled, and we'll shake hands and part friends. But I recommend it. There's some really neat things in MetaStock that allow you to do what I think is the most important thing as a trader, and that is grow. The way everyone here in this room is trading right now is going to be very different from the way we will be trading in a year. We are going to change. The market's going to change. Everything just is in such a fluctuating and volatile mode. The way we do things is just constantly being changed, more so now than ever before in our history. We change and adapt very regularly, and you can't get stuck into a platform that will not adapt with you. MetaStock is not going to be something you ever say, well, I've just outgrown this program. It just doesn't happen. The program has so many opportunities to go in so many different directions that as your trading changes, you can find that adaptability in this program, in your base program. Is the price available in India? Absolutely. It's $59 US, whatever it translates into your local currency. India has one of the strongest, most widely huge user bases for MetaStock in the world. There are hundreds of thousands of users, maybe millions. I'm not saying they're all on actual copies of MetaStock. There are millions and millions of users around the world. We would love it if they were all using a legitimate copy of MetaStock and all over the world. That doesn't seem to be the case entirely. However, whatever your local currency is, you can get the same deal. It's $59 US. Vicky asks, does this trial include both the system and the data? Yes, it does. It includes all the data. This data, you will pick one of 3 regions. You will get either the North-South American region, that's all data, or you'll get the Europe, Middle East, Africa, or you'll get the Asia-Pacific region. You choose one of those. You'll get all data from pretty much every exchange in that region, hundreds of them. You'll also get access to worldwide futures data and worldwide major indices in that package. I don't know the actual conversion for price in rupees. You'll have to run that through Google, whatever the rate is right now. Any other questions? We hope you'll take advantage of it. Let me just kind of wrap up this way. What we didn't get to do is I wanted to take a look at a couple of futures contracts for those of you who are trading, say, the E-mini. Also want to look at a couple commodities if we have a chance. These things always go so fast. Okay, so let's go ahead and take a look at the E-mini. You know, this is where as I mentioned earlier, when we first released this about a year ago, we did it at a trading conference down in Las Vegas, and it caught a lot of eyes. I think primarily it's just different. It's not something you've seen before. You know, visually, it's a very different way to look at markets and look at charts. But the people who got the most excited about the forecaster, and we didn't think about this beforehand, but were you options traders? Options and futures traders who are dealing with contracts and time limits and time extensions and of that nature really gravitated towards what the forecast cloud is telling us. There's if you're familiar with Don Fishback, who's I think one of the great option strategists out there, Price Headley. These are guys who came to us and said, "Wow, man, this is a game changer for us options traders," and it really has been. We've attracted an enormous amount of people who trade contract-driven derivatives. And because it shows you over a 7 to 30 to 90 to 100-day basis where these prices are targeted for. Okay, Don Fishback, Bobby, and Price Headley are two of my favorites. When it comes to options, I really like their strategies. I just think they're among the best. Let me hit a couple of these questions here before I'm running out of time. Will MetaStock run on an Apple Mac OS? It's actually designed for Windows. However, Vaughn, we have hundreds of Mac users, excuse me, probably thousands, and they're just running on a partition. You know, either like a Parallels or a Boot Camp. One of those two programs will usually have no problem at all running MetaStock. Fred wants to know, MetaStock is a complete platform from a technical analysis standpoint only. It does not connect to your broker. So it's broker independent. So you can continue to use whatever brokering platform you like. Ours is entirely based on just analysis. You're not going to place trades right off of the platform itself. Good. So let's look at this ES real quick. You know, 52-week high. That's a pretty important one. Wow, really interesting looking cloud here. It has a lot of surety. When you see those deep, dark looking clouds, you know, when we see this type of a motion, it looks like it wants to kind of come down, retrace at this period, and then start going back up. That's what we've seen in the past from it. If we're dealing with this doji bearish, which is typically a reversal signal, which is really funny, it looks over in the past, every time we've had that reversal signal, we've had growth. So it's very interesting. That doji can mean a lot of things. It's not always a immediate reversal. It looks like we're still showing a very bullish trend based on a doji signal on the E-mini. If you are a stochastic follower, interesting. It has an immediate look. Within 7 days here, probably 6 or 5 days, it looks like a 1% increase. And then it's just very hazy on the 30-day outlook, all until here. I don't know if you can see this on your screen, but that's pink right there, just a little bit. So all of this indecision, means that in the past, when we've had a stochastics oversold situation, we've had a short period of increase in price to about 1%. And then it's gone in every direction. Very inconsistently has it been in one place until exactly 30 days after that happens, we see it settle up on 3%. I think that's fascinating stuff. I don't know about you. Personally, I'm biased, yes. But I think that gives me new insight that I never thought of before when I was just charting. And I just think it's a neat tool. It's one that we're going to be continuing to grow. I mentioned earlier we're going to start making it for intraday bars. For those of you who are trading, would like to see forecasts based on intraday intervals. That'll be coming up here soon. But we want to make sure you have a chance to try it out. I know some of you just jumped into the room as I watched the numbers. You may have heard of MetaStock. Most people have. If you've never tried it, this is a great opportunity to have it for a full 3 months. This will essentially pull you all the way to what, Valentine's Day. So you'd pay $59 and you'd have the program all the way through Valentine's Day. That is a low pressure way where you can say, all right, I've got full 3 months to work with this. I don't feel like I have to figure it all out tomorrow. It's a great way to do it. And most people who have tried the platform for that period of time, they stick with it. They really enjoy it. Let's see. Karen, it might just do that. Karen says, as long as it pays for Valentine's Day. It better. It's very inexpensive. I mean, $59 for a month is really inexpensive. This thing will, it should have no problem paying for Valentine's Day. Cam asks, do binary options traders at Nadex use your forecasting tools? You know, pretty much every option trader I've talked to who's looked at this is using it. They like the insight. If you're using, Cam, if you're using or familiar with some of the probability cones, some of that direction, and if that's something that fits into your methodology, this would be, I think, a fun thing to play with. Absolutely. Any other questions? It looks like I've kind of run the course of my time here. It's been a pleasure to be with you. Yeah, again, we are offering the system for $59 for a full 3-month period. It includes the full system and all of the data. And if you go to the link that's on your screen there at metastock.com/tradingpub341, 3FOR1, that's a special offer we do for those who are in the Trading Pub Trade-a-thon. And you'll want to go ahead and click on that. Once again, it is not a Mac program, but we have thousands of people who use it in Mac. You just need a partitioning program of some kind, whether Parallels or Boot Camp. Those two work very, very well. There's lots of partitioning programs out there. But yeah, it's designed for Windows, but you can certainly run it on a Mac. We have many, many customers who do. All right. Well, if there are no other questions, I'll go ahead and wrap up. It's been my pleasure to join with you today. We love the Trading Pub. We love what they do. Education is very, very important. We are all in here today because we want to get better. We want to learn how to do more. Trading is pretty hard for the individual trader. And the biggest block is generally ourselves. We are absolutely our own worst enemies when it comes to trading. Well, in a lot of things in life we are, right? Trading, being that we're so given to our emotions, can be, I think, the most difficult thing to do. To do it successfully, you've got to find tools that will back up your plan. And you have to take ownership of that plan. Nobody can do it for you. You can get all the training you want. You can get all the direction you can. But if you do not put it into action and say to yourself, I'm going to sit down and write out my plan, and I'm going to, every step, put it into an exercise, hey, then you can count on growth. But I've seen too many very, very intelligent people. I mean, doctors and lawyers and people who've been to school for many, many years and have certificates. Brilliant, brilliant people who jump into the markets with no plan. It goes against everything they've ever learned at being successful in every other part of their life. Being successful in trading is the same rule set as being successful at everything else. It requires a lot of work, a lot of planning, a lot of fortitude, and keeping those emotions under control. I hope that you've taken something from this today that will help you. Again, pleasure to be here. Hope we can be here again next time. Looking forward to hearing from the rest of the people in the pub. Thanks, everybody. And to the question there, yes, you can use it on the NSC. Yeah, we absolutely have a lot of people who use it for that. Thanks, everybody. Have a terrific day. Best of luck in all your trading.